Well, a very, very good morning to you all. This is another session of hashtag Ask the Experts. This platform is brought to you by the Namibia Media Trust, and I'm so excited for the discussion that we will be having today. It is a cause for concern as the prices are rising more than we can afford to keep up. And of course, the interest rates are also going equally high. My name is Javita Kanjumbwa, and I'm going to be the moderator for the discussion of today. Now, just to give you a bit of background why this is worrisome. Looking at the annual inflation rate in Namibia, it has rose to 5.6% in April of 2022. Now that is from 4.5% in the previous month. It was the highest inflation rate since November of 2018, underpinned by prices of transport, household equipment, food, and non-alcoholic beverages as well. Now, on a monthly basis, the inflation rate increased by 1.4% compared to 0.5% recorded a month earlier, led by soaring prices of electricity and fuels. Now, during the observation period from 2003 to 2021, the average inflation rate was 5.6% per year. Now, the overall, of course, there was a 167.36% price increase. A purchase which was made in 2003 for $100 was now charged at $267.36 at the start of 2022. So that is quite worrisome. And then the question really is, why are consumer costs rising for everything from fuel, food, furniture, and restaurants? Is the current inflation only temporary, or will it push people further and further into abject poverty given the circumstances? Now, I'm not going to be answering that question. I am, of course, joined by the experts, and we'll start with Theo Klein, who's an economist and works at Simons Storm. I hope I said it correctly. Good morning to you.
Good morning, Javita. Thanks for having me.
And then a fellow journalist, but he deals with a rather interesting expert, financial reporter at the Namibian, Lazarus Amukeshe. A very good morning to you.
Good morning, Javita. Good morning, Theo. Good morning to all the people joining in.
Now, I said a mouthful of statistics as to the interest rates and what exactly is happening. But let's start with you, Lazarus. What exactly is meant by the increase in prices and interest rates?
I think it's in very simple terms. It's just that an increase in in prices and obviously interest rates, meaning there's obviously an uptick in terms of how much. So then let's start with prices, right? So that means something that used to cost you $10 last week, just to be to make it very simple. Last week is now costing you $12 today. So that slight $2 increase is in essence what we call the price increase or inflation. And interest rates obviously largely affect benchmark on if you're borrowing. And then the bank, you go to the bank now and they say, okay, if you're borrowing 10,000, they're going to charge you for simplicity, say 10%. And then afterwards that, if you come the other month and they're saying, no, we've increased our interest rates. Now we're going to borrow. If you're going to borrow, we're going to charge you, say 15%. That in essence is ideally, that movement that is measured both by inflation rate and then by the repo rate as well.
And then let's move on to you, Theo. We now got the idea of what the interest rates are and how they inflate as quickly as you can get to the store. Now, why are prices and interest rates rising so quickly in Namibia and the rest of the world, especially when it comes to things such as food, furniture, and petrol, which is causing a lot of havoc, especially over the past few months?
Yeah. I think, Javita, I'll start with the global perspective. And it's good to just have a bit of context, what has happened since the pandemic outbreak in 2020. So what has happened is that, the rich world had vaccines a lot quicker. They gave their populations had access to those vaccines a lot faster than populations of other countries. And so, we've seen also less stringent COVID-19 regulations in those countries, whereas your emerging markets who had a lot stringent COVID regulations. They did not have such fast access to COVID vaccines, so life could not return to normal as quickly in emerging markets as it could in advanced economies. The problem with that is that your advanced economy consumers in advanced economies were spending a lot of money, and I'll get to why that is in just a bit. So they wanted to buy a lot of products, but these products are manufactured in factories in emerging markets. And that is what caused a lot of backlogs. That's what caused supply chain disruptions. And that's what led to shortages of products. And we must also remember that the mining sector, even in Namibia, was not at first considered an essential service. So there were also times where the mining sector in other parts of the world was not allowed to operate. And that also led to shortages for factories that needed to suddenly produce a lot more products that consumers from the rich countries wanted to buy. So that mismatch between demand and supply is what caused prices to suddenly skyrocket. And in the way the spending comes from is the fact that a lot of rich countries had unemployment benefits. If we look at the US in specific, they gave each unemployed person about $1,500 per person, if I'm not mistaken. That was a monthly, I mean, in our currency, that's roughly 18,000 to 20,000 Namibian dollars per month. That's quite a decent monthly salary that you're just getting from the government by sitting unemployed at home. But that money was not taxed. So you could do with that money as you pleased. So all of that money was spent on general merchandise goods, and that increase in demand also led to higher prices globally. And that's why we see much higher inflation rates in the rich world. And you know, it just general prices of goods have also increased a lot. And why that's affecting countries like Namibia is because Namibia is a net importer of these products. We don't produce or manufacture the clothes, the microwaves, the cars, the furniture, you know, that we buy on a daily basis. So we are vulnerable to what happens to global prices. And that's how those and that's how we are facing high prices in Namibia. It's through the fact that we import from other countries. So you know, at the same time, globally, a lot of money was printed from central banks in rich countries. And if you print money, you increase the supply of money, which means the value of it reduces. So that's why currencies depreciated. And obviously, if your currency is weaker, that also pushes up prices in general. That's sort of the global scene, Jovita, but I've already made some links between what's happened globally and how that filters through to Namibia. And I think the main link is, of course, that Namibia is a net importer of most of the products that we consume. So at the end of the day, we are a price taker. We are vulnerable to what happens to global prices.
Mm. Now, you spoke about that we are at disadvantage because we don't produce most of the stuff that we import. Now, how exactly or what exactly needs to happen in this situation that we are in right now, and how long do you think it will take for us to get to a point where our prices are more stable and affordable to the general public?
I think, yeah, that's a difficult question. In my opinion, I can't see many options being available for us to do in the very short term to bring inflation down. Ultimately, what is needed is that we should probably pursue an import substitution growth model. What I mean by that is that we develop our local manufacturing sector. We allow foreigners to come here and set up factories to manufacture cars, microwaves, fridges, clothes, you name it, whatever, you know. I mean, Namibia has a lot of potential for a different range of products that we can actually manufacture. So, you know, and I mean, toothpaste and other basic necessities. If you can develop your manufacturing sector to start manufacturing those products, you know, in that way, if we buy local, then, you know, we are less vulnerable to what happens to global prices. In that sense, also, depending on how many raw materials you need to import from other countries, if that is fairly low, then a weaker exchange rate will also not really impact us so significantly. So in that sense, if you can substitute the imports, you manufacture it yourself, you make yourself less vulnerable to global price developments and global price shocks. And I guess that's why everyone is so positive or excited about the oil discoveries, because obviously if we can get to a point where we actually start drilling and refining our oil reserves, and we manufacture our own sort of diesel and petrol products amongst others, then of course we are also slightly less vulnerable to what happens to global oil prices. I mean, look at Angola, who have about $5 Namibian, $6 Namibian prices per liter for petrol. So, but I mean, these are long-term strategies. Unfortunately, these are not things you can put in place overnight to bring down inflation. So, that's why I say this is ideally what we need to do, but obviously this is a medium to long-term strategy. Even if you get the ball rolling for that strategy, you start the process for that strategy, you quite frankly have to just deal with high inflation in the very short term, because I don't see much else to be done to sort of, bring prices under control. Not while we are still a net importer.
Now you spoke about fuel prices and the goodness that's actually going to come out of us being able to discover oil. But at the current instance, there is sort of a disengagement between the companies who are in the oil business, and a possible strike could happen. How will that affect the economy even more?
I think maybe my friend Lazarus is in a better position to answer that question, as I guess quite a bit of politics is also involved in that situation.
I think maybe before I come to to the oil the fuel situation, maybe just slightly to touch on, or at least to add to what you had said, in terms of what could possibly happen in the short term. I think when we see a high inflation number like 5.6%, 5.4%, that's obviously the general, inflation for all, ideally for what is included in the measuring basket. But then what could also help, I think, when we're doing economics 101, they used to say, if a price of one thing is high and it has got a substitute, try and see how that substitute matches to obviously what you used to buy. So in this case, if you're seeing that maybe the price of rice is very high, try and switch to maize so you can eat up all the entire month. And if it's the other way around, you just sort of look at the inflation numbers as released by the NSA, and then just go through the list of obviously the items that you'd see that, for example, beef is high, but fish is relatively, the price increases are relatively, quite fair, if I can put it that way. And then you also compare coffee and tea, all of those items, the different kinds of milk. This kind of milk will probably be expensive over the other one. So you compare all of those items. It's a whole lot of admin, but I think it will really have an effect, on what you really fork out on your daily and monthly expenditures. I think to come to the fuel situation, that's I think you've probably seen in the papers today as well that the retailers are actually saying there's no money in the fuel business, especially in the fuel retail business. And they really, most of them, I think that we've spoken to over the past, since last year, I think since the advent of COVID, that the money that they were even getting, even at COVID times, it was, I think they were just breaking even. There really no profit on the retail of fuel. And most of that was mainly coming from, most of them have these convenience stores next to the service stations. That's where mostly they're making money. But I think their request is probably fair in business sense, seeing that the margins haven't been adjusted over the last 4 years, if I'm not mistaken. And I think it's, with all the other price increases, transport increasing, your rental, electricity is increasing, but then the other thing that is constant is just fuel price, because it's regulated. I think it's to an extent unfair, but also again, you don't want to have the retailers obviously pushing up prices in as much as they want, because then in itself it becomes a very difficult situation, because if you have fuel prices that are very high, that the effect of that, even on your productivity, not everybody will be able to drive around again. If say, for example, you operate part of your operations on a diesel, on a run generator, for example, if in case electricity goes off, anything like that, that also becomes, a high cost. And then that high cost also increases your other cost in other areas. So I think we've received complaints as well of farmers, for example, that are not connected to the grid, to your normal grid, that they use generators at their farms. And you're saying these fuel prices are killing their business as well. So you've got all these increases that are going on. But if possibly you could see an adjustment maybe in that, the margins of the retailers could obviously get into that. It will probably push up costs, but I don't think it will also accommodate them to an extent, because you can't obviously have somebody just sitting on their frustration alone, and then the other people seem to enjoying the benefits from it. I think government should also probably look inside and see and look at obviously some of the levies that are included within the fuel price. They could also try and reduce some of them. It doesn't have to be, for the probably 4 months, 5 months, and 6 months while the situation stabilizes. And I think that's probably one of the things that I think government hasn't really taken much seriousness to it. That I think because they are not really affected, they don't really see, for them, probably the same inflow comes in terms of maybe adjusted a little bit in terms of inflow from the levies, from the taxes here and there, but they don't really see that the people that are paying on the other end are in the deep. So I think it's a fair request in my view from the retailers, but I don't think shutting down is something that we could afford. I think this could obviously be resolved, diplomatically, and they can come to one table and we try and compromise on certain things that would ideally, for the benefit of, like they say, one Namibia, one nation. Let's Harambe pull together in this, and then maybe we'll come out better on the other end.
So true. Theo,
I think,
just
sorry,
yeah.
Jovita, maybe if I just want to add on to Lazarus, I think I agree with Lazarus. You don't want to give the petrol stations too much pricing power, because then obviously they can push up petrol prices even a lot further. And obviously, so to that extent, I can understand government wanting to try and regulate the prices to protect the consumer as far as possible. But then I think on the one hand, if you do limit the pricing power of these, private businesses, then, you must also be open to have, an open relationship where you discuss business cost increases. You consider sort of requests from these private businesses if they can provide evidence to show, but listen, our electricity costs have gone up, our salaries have gone up. Lars also spoke about rent and all these things. If you can provide evidence to show, but listen, my business costs have increased by X%, and at the current petrol price, it doesn't make business sense for me to continue operating. So can we please not meet each other halfway, or, and in that way, you start the negotiation process to have that open relationship between government and these private businesses. So I think it is, as Lazarus says, it is a difficult situation to handle. But I think, Lazarus, we might still be able to at least always go fill up our cars at Namcor's petrol station, because government isn't always necessarily focused on making a profit. So Namcor petrol stations might obviously continue running at either losses or just barely breaking even. So we might always have those petrol stations to go to.
Well, while we're still at the conversation, if you're only tuning in right now, we are also live on Facebook on the Namibia Media Trust platform. You can log on there, share the link to that one as well. But I do see, of course, people joining here on this platform as well and joining the conversation, as we're really speaking about an issue that affects every single Namibian, regardless of of course, your contribution to the economy. But you spoke on something that government is not per se interested in making a profit. I know that sounds a bit. But when we look at let's say a sector and monopoly being brought to a sector, how does that affect the economy? Whether it's now the retailers, infrastructure, if a sector is monopolized, what does that do to the economy, Theo?
If well, moving towards a monopoly, you concentrate market power more and more with a single company or a single group of companies who agree to work together, and in that case, we call them a cartel. That is not an economic efficient way of structuring any industry. And the reason for that is that obviously they will have dominant market share. So they dominate the market, and that market power, what I mean, sorry, by market power is the fact that if they are the only seller of whatever, let's say they are the only seller of oil in the whole country, you have nowhere else to go. So if you're not happy with them, you have a big problem. So that's what I mean with market power. And that market power then translates into pricing power as well, so that that monopoly or group of companies who cooperate together, the cartel, they can then artificially, change prices, so that prices do not necessarily move based on market fundamentals. In other words, demand didn't increase, but they increased the price, or supply did not decrease, but they still increase the price. So that's what I mean by artificially, manipulating the price. And they obviously manipulate the price to benefit themselves. Obviously one cartel that I think most of the audience would know about is the OPEC group of oil producing countries globally. They are obviously smiling all the way to the bank with high oil prices, whereas the rest of us are struggling. When we need to refuel our cars, but also obviously higher fuel prices leads to increase in prices in general of many other goods and services. But they benefit by artificially keeping oil prices high because they make more profits. So, but I mean, coming back to sort of a hypothetical example in Namibia, you also have economic inefficiencies. The reason why I say that is because if I'm the only seller of a single product in the whole country, I don't have much incentive to do research and development to improve the quality of the product. I don't have, let's say the product was a laptop, for example. I'm the only seller of laptops in the whole of Namibia. I don't have an incentive to add features to the laptop to make it more tech savvy. So I'm not going to add a camera. I'm not going to add a color screen. I'm going to keep it black and white, that kind of thing. So because I dominate the market, if you don't buy my product, you have nowhere else to go. So I'm not going to spend money to do research and development and to innovate. So your creativity and your innovation, suffers as a result. And that's why it's also an economic inefficient way of structuring any industry.
Now, coming to you, Lazarus, there has been a huge concern regarding the Namibian dollar being linked with the South African rand, and it's not a new conversation. I know you're already hinting at probably the answer, but like we have heard, reports of potential decline in the value of the South African rand. Now, given that the Namibian dollar is linked to the rand, how may, of course, this situation now impact Namibia?
I think it's always quite a very interesting conversation that this only comes up when the rand is somewhat depreciating against the US dollar. But in good times, it's like, oh yeah, we are also benefiting. So I think those are some of the pros and cons that comes with linking your currency to another one. That in times where it's bad, usually you also have to take the punches, and in times when it's good, you also need to somewhat take. When it's good, you obviously get the gains, and when it's bad, I think you also must participate and partly in the suffering. And even though sometimes it's not coming from you, because not all the benefits as well are derived from what you're doing in country. But I think a delinking, I think at this stage it's probably not going to happen. I think we don't have the capacity yet to stand on our own. Which I think it was then the finance minister Kale Schlatban that has indicated, I think it was in some meeting, I think that was the very last time that we had a senior official, I think, calling for a possible delinking. And I think when he got back here, I think he had changed his mind within the flight. I think when he got back here, he changed his mind to say, no, we're not delinking again. But I think that really, you know, what we're seeing now is obviously reflected in you know, I think, and it's not only, I think, the South African rand that is also depreciating. If you look at the euro and the USD situation as well, the euro is also slumped as well. I think as of yesterday, they almost, if not, I don't know where they're standing now, Theo, but yesterday I think it was almost 1-to-1, almost 1-to-1. So it's all these market developments, I think, globally that Theo really explained that are causing, you know, this fluctuation in currencies. And I think we just within one of the cycles that where we're really seeing, you know, the economics within the country that are not supportive of ideally or potentially appreciating South African rand towards other global currency, and that's what we're really seeing. What that really means, I think, for locals is that whatever we're going to import in now is going to become expensive. So if we used to import, let's keep it simple to laptops that Theo was talking about. If we used to import them on the dollar and the rand was, the rand was stronger a couple of weeks ago at $15. Now you're probably going to import it at $20. And that again is also going to increase prices again, because if you're importing at 20, when you add your markup, you will be at 22 or 25. You add your VAT is already at 27. So all of those things will cause the prices of even of local goods to increase again. I think, like you said in the beginning, most of the goods that we have here, we are imported. So even most of the inflation that we still have here as well is also imported inflation. It's not really stuff that we have control over. But I think the good thing is always, again, to go through the NSA numbers and see where are the movements. And then again, like you said again, look at what are the possible things that we could possibly also produce in country and try and substitute those. But, you know, conversations like this come in and we talk about the same thing and say, let's substitute one of these things. But when the rand appreciates, and then it becomes, say, to the US dollar is 13, then it's like, no, everything is fine now. And then we wait for it to go back to 17 again. And then we say, no, let's import substitute. I think these cycles are obviously common within economies. It's not only Namibia that is faced with some of these things, but I think it's fair that we then, obviously, like you were saying, develop, you know, long-term strategies that would really ensure that we stabilize across the board over time, and not just stabilize, also stabilize and try and obviously edge up as time goes. So yeah.
Now, you know, we do have some trade agreements within the SADC region, with Africa as well. On the African market now, how difficult will it be for us to trade, even with these agreements in place?
I think the agreements that we have in place, you know, in as much as you know, trading with others is concerned, is probably with SACU. SACU was Southern Customs. Do you help me, SACU? Southern African Customs Union, yes. And that ideally, it's a group of 5 countries, if I'm not mistaken. So it's with Namibia, Botswana, South Africa, Lesotho, and Eswatini.
Swaziland, yeah.
Yeah, Swaziland, Eswatini. So those 5 countries have somewhat come together and say, you know, whatever we are going to produce and trade with each other within the bounds of these customs unions is not going to attract some of the customs and excise duties that ideally, when you bring in an item from either Zambia, you bring in an item from Angola, you bring in an item from even the UK. You know, those have various customs and excise duties that are then added on top of the import VAT. So, for example, if you import jackets, for example, from Thailand, and I don't know, do they even make jackets in Thailand? But anyway, import jackets from Thailand. So on top of, you know, the import VAT that you pay at the border, you also then have to add customs and excise duties on top of that, which they vary obviously with different goods. But if you had to get that from South Africa or from Botswana, you will only be paying the import VAT. So that in terms of obviously pricing also plays a very big difference in terms of affordability, because if you have, say, the same kind of brand, if I can put it that way, and you bring in one from Thailand, and then you bring in the other one from South Africa, one has those excise duties, which is its cost will obviously be high as opposed to the other one. So I think that has quite helped, in developing. I think probably only South African, manufacturers that they can then push most of their goods within Namibia, South Africa, and other countries, and maintain a certain level of market in those countries. That then they tend to keep away, other goods from coming in. I think it has really allowed, within SACU to allow to build, strong trading relations. That even if, for Namibia, if you're sending your items to South Africa, which we do a little bit, but not that much, but maybe in terms of, your agricultural produce that we send there, that also helps, in also developing the local economy. But I think what I'm probably positive about, is obviously with the Africa Free Trade Continental Agreement, that if it then, obviously, I think, when was it launched again? I think it was 2020, right? First year?
Yeah.
2021.
I think it was last year, yeah.
Yeah, 2021, where they're saying we're going to liberate and remove some of these trade restrictions within, the African continent, and try and push for inter-Africa trading. I think it would really help. Instead of, we send some of the raw materials out as they are, and then just to bring them in. You have items like that. That always makes me angry in a good way. We send blocks of granite, for example, to Europe, and then just for them to come back as tiles that we use in our bathrooms. Ideally, something that would just cut there by carabac, but we don't have the machinery and the manpower and the know-how to do that, apparently. But I think which I don't think it's a kind of a difficult thing to do. But if we can have develop capacity within countries, with even closer to home, countries, if we have cheap labor, for example, in Zambia, we can set up shop there and say, guys, we're going to send you all the granites, and then you just cut marble, you cut it, and then you bring it to tiles, and then that will obviously improve trade and relations within the African continent. Also, with that also comes, the improved living conditions within the countries in which they operate. Because now, what we do is we import a lot of things. Say, for example, we import 1,000 of these pens, and our cost of this pen is $1,000. And our cost of running the shop to produce that pen is, say, $10. And then other costs, maybe they add up to $100. So we have selling this pen is going to cost us $1,100, but we can only sell it for $1,400, for example. So our profit from this pen that we can stay within the country is only that $300, because you've got the 1,000 going straight out because you didn't produce this within the country, and you've got that other $100 going straight to cost. So what you're left to develop yourself, to develop your economy, to pay taxes, to pay everything else is only that $400. I mean, what can you do with $400? So I think the customs, the trade agreements that we have within the African continent, and I think that we could potentially develop as well within the African continent. I think there's some good talks between Namibia and Tanzania, that there are some good relations that are trying to form there as well. Tanzania, I think, is very strong on the textile industry, for example. That could potentially help as well. Probably not good news for Swaziland, because they're also one of the biggest suppliers of textile within the SACU region. But I think that will also allow for competition, and also bringing down the lower prices. Because if you have, like you were saying, if you have one of these big players, within an industry, then they don't do any research. They'll keep the prices as is. They don't improve their output. There's no efficiency. Everything is stagnant. But I think with obviously the current trade relations and the current trade agreements that we have, I'm not so keen. I don't really like talking about the trade agreements obviously we have with China, because China tends to be very, no offense, but they tend to be very, what is the right word here? They tend to be very, they tend to be very one-sided in terms of, in terms of obviously because for most of, I think, the projects that we have reviewed, if it's a Chinese affiliated project, they bring in their own labor, majority of the labor, maybe 50% to be fair, or 60% of the labor is theirs. Most of the materials that they use in construction is theirs, the cement, the shovels, literally almost most, if not all of the items they bring in theirs. And they obviously say we are going to fund this with our own money, but then what are they funding? They bring in their own money and then they take it out again with the raw materials, because there's just nothing. What is left is mostly very little that they contribute even to the tax coffers.
I think self-interested would have been a nice word to use there, Lazarus.
Yes, which I think it's probably something that we also need. I know there's limited capacity, obviously, within the Ministry of Trade to someone that says, trade agreements are one thing, to have a very good, well-written, worded trade agreement is a wonderful thing to have, but also the implementation of the trade agreement and also the review of that to see what we have agreed upon is really taking place is also another thing, which I think hasn't been quite happening over time. We have seen that within the fishing industry, for example, where you have these guys that are given quotas to fish, and then they fish, and then they take all the fish, they take all the money, and then the development aspect they neglect it completely. But I think having the trade agreements, I think, is really wonderful for any country. I think that allows free flow of goods and services between countries. But I think making sure that we get the benefits ideally that we would wanted to get from those trade agreements is another thing that I think we really need to consider and fix our eyes on it. I think most of the times it's very funny. You speak to, for example, a person that you'd expect to have knowledge of some of these things, then though it's within government, and it's like you'll be hearing it for the first time, and then you'll be wondering, okay, so what is it really that you've been doing all the while? But yeah, it's some of those things that I think we
still need to work on.
Yes, I think that's very good. Yes, yeah.
If you're on the platform and you have any questions for the panel, please just drop them in the chat box, and then of course I will be able to give them to the panel to just answer any question that you might have on the topic, that is the rise of prices and interest rates as well. If you're on Facebook, you can also just drop the question in the comment section, and we will be able, of course, to answer the questions. Now, moving on to the really, really huge concern now is, how does the current economy now, how does it affect the average Namibian person who's just trying to get by? How will this situation contribute to the poverty or abject poverty that they are already currently in, as we do know that the high rate of unemployment is also a contributing factor? Lazarus and Theo, also, both of you, please give your view on that question. I'm just dropping it right there.
Okay.
I don't like giving bad news, but it doesn't. It's really not good news if you're on the bottom end. I think obviously they say interest rates and inflation, they affect different people at different levels. If you are obviously in high income category, I doubt an increase of $5 in terms of how much you pay for your food really does make a difference. On ideally how much you then get to spend at the end of the month, in one month. But really, for those that are on the bottom end, I think it's going to be very difficult. It is already difficult. It has been already difficult since obviously with the dawning of COVID, we have got a whole lot of people that lost their jobs. I think approximately, I think the numbers that we have received from estimates is probably within the region of 18,000. I think earlier on it was estimated around 12,000. I think it's probably moving to 18,000 now, even though your hospitality sector is somewhat is alive now and is again recruiting. But then we gain seeing that most companies are still in an attempt to survive, obviously, and also looking at the long term. They're also doing away with some of the jobs. And you've got graduates as well that are still coming in the market every year, and the market is unfortunately unable to absorb all of them because, again, our production capacity is quite limited. But really, it's really not. It doesn't look good for those that are on the bottom end. And I think I don't want to be a motivational speaker here.
Please do it. Mentioning this.
But they say apparently, hard times, they also create very strong-willed people in terms of obviously, in terms of how you use resources. I think we're probably seeing a lot of responsible usage of resources, both at household level and also at government level. Not that much at government level, but I think we're seeing, a more well-targeted, in certain cases, spending that you just don't spend anyhow anymore. You obviously spend your money with at the back of your head, knowing that things are not looking quite well within the coming months. But I think pushing people in poverty, I think we have already seen that, with the GDP per capita over the last few years, that it has already gone down. I think it used to be at around $6,000, and then now I think it's in the region of 4,000. So that is already an indication that a whole lot of people are moving somewhat towards the very people are more poor, if I can put it that way, than they were a couple of years ago. And also I think, Namibia is we're very big on savings. And with high interest rates, high inflation, obviously the money, I think I don't know if we are out of the negative yet, where you've got inflation that is higher than we are still there. 5.6%, inflation is 4.5%. Interest rate is 4.75%, you've got inflation at 5.6%. So you've already got that difference that if you are keeping money in the bank, you're already losing out. So I think it's probably a time where we could try and take Theo's advice here and then try and consider what are some of the things that we could potentially try and produce within in-house. I think one thing that I think I saw that was really good that happened over the last few years is the rising up of so many small scale farmers that we don't even, if you look at the agronomic board numbers.
Hey, let me stop you there before you answer the question. I'm coming to the agriculture sector, but yeah, just quickly give us your view on what you think is going to give, or what is the impact on the average Namibian, the current rate.
Yeah. Look, the rising interest rates, that is also a concern. We've already done about 100 basis points hike in the repo rate from the beginning of this year till now. And we at Simony Storm at least expect another 100 basis points hike between now and the end of this year. What that means is that, our prime interest rate went from about around 7.5%. We're now at about 8.5%. So, 9.5%. And then that will be shifted up to about 10.5%. So if our expectations at least materialize. What that means is that, most Namibian households are indebted. Last year when I did the calculation, we estimated that the average household sits with over 6 months of debt of salaries in debt. So in other words, your 6 month plus salary is in debt that you're sitting with. So obviously with interest rates increasing, your monthly interest rate, your debt repayments will go up. And that means you also have less money to spend on other basic necessities. At the same time, we do not necessarily expect to see a material improvement in salaries or wages overall. In fact, we still hear of companies in various sectors putting salary cuts in place. And salary cuts that were introduced in 2020 during the lockdown are still in place till today in some businesses. So I think, obviously, your average household is under a lot of pressure. Can we still eat 3 times a day, or do we only eat twice a day, kind of thing? Do we as parents stop eating to allow our children to eat? That is the real situation for some households. So, I think that situation is likely to get worse. Our poverty levels, if I look at the Afrobarometer surveys that were done last year and published earlier this year, those numbers point to the fact that our poverty rates have increased. I actually have some of them here. 42% of Namibians had to go without cash most of the time last year. 24% had to go without food most of the time. 21% had to go without water. Those statistics should definitely be concerning, not just for general society in Namibia, but definitely also government. The reason why I say that is because typically in other countries, when you had rising food prices and in an environment where you have high levels of unemployment, those two combined typically led to social unrest, protests, and even revolutions. The latest example we have of this is the Arab Spring uprisings that took place in 2011 in Northern African and Middle Eastern countries. And I'm not saying we'll have a social unrest or revolution in Namibia. Namibians are in any case more known to be very passive people. But I mean, at some point you have to ask yourself, how much longer will the very vulnerable, the very poor, and the unemployed in our society stay quiet? How much longer can they endure? And at what point will their frustrations boil over into protests and social unrest? I think we are still fairly far from that point, but it is a risk that that we are very aware of. And at least if we don't see protests and so forth, we do expect to see an uptick in crime. And, an increase in crime also leads to tensions between people in society. So I think, there's a lot of social risks around this, and I think it is very serious. And I mean, that's why we've been saying since last year that at some point government might have to consider putting in place some sort of basic income grant, even just temporarily. Obviously, you don't want to put a grants in place for long term because then people become dependent and sort of lazy, if I can say it like that. But I would say at least temporarily provide some sort of basic income grant for the very, very poor. So that it must be a well-targeted social spending program that really only targets the most vulnerable in our society. That's at least something that can be looked at for the very short term, in addition to the long-term solution that I gave earlier. And I mean, obviously, with the Afrobarometer surveys that were done, they estimate that our national unemployment rate is now at 37%. The latest figures we have from the NSA comes from the 2018 labor force survey, and that showed an unemployment rate of 34%. But I mean, we think it's a lot closer to 40%, most likely. But then what is also very concerning is that your youth unemployment is estimated at currently estimated at 43%. So, there's a lot of frustration probably brewing amongst, our youth. And I think that is also, a very big social risk that we need to be cognizant of and, try and address.
Now, just because we are running out of time, I'm going to ask you guys to be very brief on the last question, which I'm going to combine because I think it's really important that we address these two questions, but I'm going to put it into one. The last one is, with the current inflation rate, how are we going to attract investors to come into the country? And we also know that agriculture is one of the sectors that is trying to be made, of course, one of the prime sectors to invest in the country. How quickly can we get that up to solve some of these issues relating to the economy? Just round it up a bit, answer those two in one.
I think, I'll maybe go first. I'll be very quick. I think it is quite simple and easy to do. We need to improve the ease of doing business in Namibia. We cannot just go to Davos and Dubai and sell Namibia or market Namibia to foreign investors. But then when they actually come to our country, the experience is not so great. They struggle to register their businesses with BIPA. They have issues with NAMRA. They struggle to get working permits from Home Affairs. And then when they want to go and buy land to put up a factory or whatever, then they typically need to put a bribe or provide a bribe to regional councils in order to get that land. So what I see is that there's a big disconnect between top levels of government and lower levels. The head of Home Affairs says, foreigners are welcome to come and work in Namibia, but then the workers at Home Affairs who deal with the permit application, they reject it for some other reason. I don't know if they are slightly xenophobic. They don't want foreigners to come here and take jobs from Namibians. I don't know what their reasons are, but there is a big disconnect because their boss is welcoming foreigners but the workers in the offices of Home Affairs are not welcoming. So, and that I can say for many other public administration services. So we need to get better management in these public administration services so that we really allow foreigners to come here, we welcome them, we make things easy for them. That will not just attract foreigners, that will actually also improve, efficiencies for Namibian businesses who also have a lot of admin work or red tape or, with government or, with certain regulations on a daily basis. So I think, that's really the short and sweet answer from my side is we really just need to improve the services in our public administration services. And there my problem, or, the problem is typically with your normal workers who sit behind counters, who have to deal with applications and, who for some reason just make it very difficult for foreigners to come and set up businesses here.
And Lazarus, just yours. I know you really wanted to touch on agriculture and the impact it has. Maybe just to answer that.
Yeah, I think there's something I read once that they say no matter how bad obviously the economy is doing, at least just make sure people have got something to eat. And that we've seen, I think we've seen that as of late with Sri Lanka, for example, where people have done quite terrible things. I think yesterday they even prevented the president from leaving the country. I think he wanted to run away, but they didn't want to process him. The Home Affairs officials or the guys at the border, at the airport, sorry. They didn't want to process him. Immigration services, they didn't want to process him. But I think the agricultural sector is really one of the key sectors, not only because it provides food for the Namibian people, but I think it's also one of the greatest and biggest employers in the country. If you see that sometimes but when we say that there's investments into agriculture, there is good rains, that particular year is obviously that a whole lot of people tend to be more employed. There's fairly less complaints on several things, even though there might be several items that are to the bed that are happening. But obviously when people have got something to eat, then they are able to stand up and think again, because I don't think anybody is able to think quite straight on an empty stomach. But I think, yes, agriculture is also one of the sectors that I think government is really trying to push for private capital to flow there. I think we've got even the Minister of Agriculture, both in Dubai, and also some of these projects will also sort of marketed in Davos as well for the green schemes. And the green schemes, even the ones that we have that are operating, are not even operating at full capacity. So I think if we really could have better management within the agri-boost level, which I think, I don't know if that liquidation project is still ongoing, or the split was stopped because they're liquidating that managing company. But I think if we can really have good management, it always must start with management. It's not that we don't have the resources, like you were saying. There's that disconnect again between people that obviously share the dream of having Namibia sustainable in terms of agriculture, in terms of putting up facilities here that will do a whole lot of good things in the country, but the people at the bottom that are there will push for some of these items to be operational. They are the ones that are somewhat very dragging their feet and just making the whole situation messy. But I think what I really like, about the agricultural sector, especially looking at the numbers now that are released by the Namibia Economic Board, in terms of how much we import, on the basic items that ideally we could produce here, your tomatoes, onions, not that much, your potatoes, and what the UNDP is doing, in terms of trying to push out, climate resistant seeds. That I think those are good developments that I think they're probably not going to bear fruits now, but I think, obviously in the long run, we're going to see somewhat of a sustainable, agricultural space that would really see Namibia, at least to a reasonable extent, sustaining itself with regards to, obviously providing food for its country. And that in itself, when you produce that much in country, then again, you control, the level of inflation that you also bring in with all the other food items that you bring in from outside. But I think the agricultural sector has a whole lot of potential. I'm not quite happy with how much is being invested into the sector, especially obviously from the banking sector. It's very, very, very small. Obviously, it's understandable given the risks that are prevalent within that industry because of our drought situation, the rain that is not always sufficient, and also the number of people, the skilled agricultural people that they have. Because I can tell you this, my brother, for example, studied accounting and is into farming. He's got a small girl gardening, but we don't have, there's only so much he can do in terms of producing. He could learn YouTube tutorials and everything, but it's not the same as obviously you having, an agricultural degree, knowing how to, obviously run a farm. It's not the same. Even if you go apply for financing, they'll ask you, so what did you study? The moment you say something else other than agriculture, they'll probably say, high risk. And they'll probably not give you that capital. And I think also the other development I think we've seen with Agribank as well, giving out salary-backed loans for those that want to farm. But my problem, I think, with Agribank is always that they've funded so much of land. Ideally, for them to have, I think the balance sheet, the last time we did the assessment, I think it was over 80% of their funding was directed to land, which I don't think, if you have so much money just locked up in land and very little that you direct to operations, I mean, what are people going to produce if all the money is just servicing land? I think it really wouldn't help in terms of moving the sector as well. But I think with obviously with the realization of some of these things, we have seen that the Agribank is also pushing, for youth-friendly products, financial products that they could ideally attract most of the youth to venture into agriculture, because I think it really has the potential, and if unlocked properly, that could really be wonderful. I think also partly to touch maybe on some of the private developers that we've seen as well, with Savannah Beef now, rolling out that they're calling, where they're trying to secure, I think, around 200 million to set up an export facility for beef. I think that is also good because we are still not fully utilizing our quota, Norwegian quota. So I think that if we restock quite well enough and we can slaughter, I think, very good numbers, I think we'll also see growth in some of those areas. But I think agricultural sector is probably one of the very key sectors that I think if we just manage it right, and if not only agriculture, also like you say, across the board. Yesterday I was speaking to someone on the complaint within the mines and industry.
Unfortunately, I'm going to stop you right there. I think move to agriculture and let me handle the financial aspect of journalism. I think you've just found a new passion right there. But thank you so much, Lazarus and Theo, for making the time to be on #AskTheExperts. We have certainly learned so much from the two of you, and we can't wait to have you back on the platform. While to all the guests that have tuned in, this has been #AskTheExperts. It is the second episode of season 2, and of course, let's keep the conversation going on social media. Go to the Namibia Media Trust across all platforms, on Twitter, on Instagram, as well as on Facebook. You can just drop the questions or whatever that you have to say with regards to the topic, which is rising prices and interest rates, which is really a cause for concern for a growing nation like Namibia with a small population. So thank you all so much from myself, Javita Kanjumbwa, and the team here at the Namibia Media Trust. It is a good day.